Hello, it's Thursday the 24th. I'm FX Plu and this is Market Brief. So, inflation risk was pushed to one side yesterday as we enjoyed a pretty encouraging day of UK data. Services output pulled back just a little from May, but we still carded 61.8, which is pretty positive. And given the 4-to-1 ratio of services to manufacturing, it means that the UK recovery is still in full flow. Any concerns that employment issues could slow output have not materialised yet, but with the withdrawal of furlough support will have started next time this data is out, so we could see a dip next month. The MPC are keen to avoid this. They want to avoid a slowdown in the recovery, especially when inflation is rising. So there may be some tough questions looming for Governor Bailey at his press conference today. We can expect him to be asked about the tapering of the current level of support, but with the removal of furlough, such an unknown quantity, chances are he'll be trying to buy himself a little bit of time to review those effects. In the market, sterling rallied, trying to test the 140 level against the dollar again. We pulled up at 139.70, but it does look poised to break 140 if we have some positivity from the MPC today. One to keep an eye on if you're a dollar buyer. But how far over 140? Well, that's a discussion for you to have with your broker. But hey, if his chat stinks, you're welcome to give me a call. I'll happily bore you with these dulcet tones instead. You know me, I'm here to help. Over in the US, the economy is still growing at a record pace. The Fed is still trying to manage market expectations, and Powell wants to keep things grounded. He wants to convince the market that the rapid rise in inflation is indeed transitory and that concerns over the robustness of the recovery are still valid. The Fed seem prepared to test the market's patience over inflation as they all but confirmed that the recovery takes priority, suggesting rate hikes may not be seen before 2023. Indeed, Atlanta's Fed president suggested that any idea of rising inflation lasting only 2 or 3 months is way off the mark. He feels that 6 to 9 months is more realistic, which begs the question of how high will they allow inflation to go while holding on to this notion that it is transitory and it will indeed correct in due course. Facing further inactivity, the dollar is struggling to hold on to those Fed-induced gains from last week. The dollar index fell to 91.50 yesterday as euro dollar tested that 120 level. We pulled up at 119.70, but the dollar is looking a little fragile now as the market expects the Fed to continue sitting on their hands. As such, it may be up to the Bank of England to determine dollar direction. Cross your fingers for a bit of action this afternoon. Right, well, that's it from me today. Have a great day. Hopefully we'll see something going on this afternoon. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.